morning. Week beginning 5th of October 2015. We are discussing stock markets at the beginning of October. Point number one, I'm not very hopeful about October in terms of upward movement. That is a statement with the rider that if there are talks about US not raising interest rates, then, well, in that case, it might still move up. There's no technical evidence as of now to suggest a short, but the manner of trading and the method of trading and the way the trading cycle is working every day, it seems that there could be some distribution syndrome happening at this point of time. I think some distribution syndrome has already happened in Bank Nifty, and just looking at Nifty, you might miss the fact that Bank Nifty needs to correct or is trying to correct or will correct, something like that. Having said that, these are overall statements. The micro statements happens to be for the week, and we are going to discuss about the week. In the meantime, I'll take a couple of questions which has come. Shubhajit Sarkar has requested for a midweek review and all that. It's a good idea, but I don't have time to do all that, so it has to be only once in a week. The second question is from Anindita Pal Chaudhary regarding various things. Amongst that, Supreme Petro as an investment. I have really not understood the movement behind Chennai Petro, except that the results are good. And the management commentary says that it's likely to be better or will maintain. Supreme Petro does not come under that category, and thereby I really don't know about Supreme Petro. BEL or BEML at this part of time, they have done their job. They're waiting for the macro economy to improve. They're waiting for defense orders in case of BEL and more road construction award in the case of BEML. So basically consolidating, there's nothing exciting about the stock at this point of time. After RBI policy as well as present world market turmoil, in which sector should one invest more amongst pharma, tech, infra, auto, bank? So the approach has to be bottoms up, because pharma has to be invested from a top-down approach, whereas infra is from a bottoms-up. Auto best to avoid this point of time. Very simple reason, the Volkswagen episode is really large, but they have got about $8 billion in cash in their balance sheet. Plus, they make about $2 billion every year. So they will be able to manage it, but the reputation and the loss of brand value or others, the market will not take it kindly immediately. So auto will have especially the autos who have got exposure to Europe, like let's say auto ancillary parts like Motherson Sumi. Yes, a lot of things have been factored in the price. It is looking close to a good valuation to buy, but because the cloud is there, one should not put good money immediately in Motherson Sumi. But I definitely believe that the price has factored in the bad part of the Volkswagen. Coming back to the other auto, I think we could look at dips Ashok Leyland and definitely Maruti at some point of time. Maruti is in a corrective phase and is likely to correct more as long as it's below 4640. So maybe sub 4500 or even 4200, 4250, something like that, it would be good to buy Maruti for a longer term gain. I'm not hopeful about Tata Motors, but I am definitely hopeful about Atul Auto, or maybe Aisha Motors also. But in a 3 months horizon, if the market corrects, then there will be good entry points, and that should be taken into account. Tech I am avoiding because we are not very sure about America and Europe's business visibility as far as the tech companies are concerned. And I'm more worried because of Asian Tech, because of one client has given a warning that then, it can happen with TCS, it can happen with Infosys, that some one client is not giving the orders. So I'm not very gung-ho about this particular technology sector. Bank, I would restrict to private banks only, but subject to a correction. As I said, that Bank Nifty is likely to correct. Request you to explain the impact of higher FPI quota in bond and increased money flow in debt fund on equity after RBI policy. If the foreigners want to put money in the bond and earn a safe kind of interest, then that's their choice. And the bond funds will invest in bonds only, they are not going to invest in equities. So the equities might have a higher allocation in bonds. So that is their choice. It doesn't materially impact the matter except the fund flow gets lesser than what it was. Okay, there's this Kripa Shindu Kaur asking about what is wrong with Motherson Sumi. I just explained about the Volkswagen. So Motherson Sumi is a victim of that. Invest now, yes, you can start doing investments from this zone onwards. It's good to invest up to 100, but then you can start. What about Karuturi Global? KGL, I suppose. What is it, 2.5 rupee? What is bad about investing in 2.5 rupee? I think you can invest 2.5 rupee. Now, how long you have to wait, one doesn't know. I will hold you from here. Can Markson Pharma possess a potential to be splitted and multiply my holdings in 10 years time frame? I don't think Markson Pharma qualifies for a 10 years time frame. It has done about 10 times in the last 1 year or 2 years. So the best of the juice is already there. But Markson can still have a momentum buy and some momentum play can still happen. I am not going to take a view of 10 years with Markson Pharma. Bonosri Mukherjee, can I invest 2 lakhs in Granules, DCB, Indosin and Pincon? Yes, you can do so. Or it would be better to invest in Igarashi or Wabag and Granules. Well, the other names are also very good. It can be done. So total number of shares is 1, 2, 3, 4, 5, 6, 6. Okay, fine. You have 2 lakhs. Divide by 35,000 each. Create a portfolio and a basket and just keep tight about it. Okay, no more questions. Now the present market, stock ideas, trading ideas. Nifty is a short, stop 8050 or 8100. Bank Nifty is a short, stop 550. It's not a straightway short. You'll have better days when market pulls up. The main trigger is over 50 basis point rate cut. Now the next trigger is results. Going to be reasonably good, but that is not going to excite the market. Fund flow is absent. you have equal value of Indian institutions buying and the same more or less value foreign institutions selling. So there's no net surplus getting into the market. And as long as that doesn't happen, there's no case for the bulls to play. But definitely these are accumulating times. Intelligent investors are accumulating, I'm too sure about it. Maybe some of them have started accumulating in terms of budget. So that is one part of the story. You are accumulating with a range of about, say, very much up to 7,500 Nifty. Assuming that is going to come. But the downside risks are limited and upside potentials are also limited. So you are in a junction where you really are a trader, except that if you are an investor on a longer term basis, you can start doing that. Having said so, I would like to add on that the technical support level of Nifty is by closing 7950. But the real correction starts below 7,900. The shorting call of 8,000 or 8,100 is in order. And if you find that if it's trading below 7,900, then buying 7,800 puts are in order. A hedge could be like this: you can buy Nifty and short Bank Nifty. I've written that in my newspaper, and I think that strategy should work a bit. But there's no point in doing the hedge. When you have a negative mind, just play negative. If you have a positive mind, play positive. This hedge can happen. Like one of the old friends of mine said कि मत्थे का hedge मत्थे से होता है, पोते का hedge पोते से होता है. Which means if you are long, you should hedge by going long in something else. And I wish to understand what exactly he meant by that hedge is there. So some long is less better and some long is much better. But I don't still agree with his point, and I still think that within the sector the hedges are going long. Like typically you went long somewhere around 3,500 in Maruti and you went short somewhere around 450 in Tata Motors. You're getting that hedge, hell of a lot of money. So I think that kind of hedge is desirable. But right now, last week I had given a hedge program of Yes Bank short and IndusInd Bank long. Net of 6,000-7,000 bucks one is making. So that kind of hedge sometimes works well. Yes, people are going to look at technology. I am too sure charting wise is also allowed in terms of technology. But then I would not like to stick my neck out to buy technology because I don't see the results are going to be tremendous. If there's a movement at some point of time, you should buy puts of Infosys or TCS because they will fail to deliver the way the market wants them to deliver. I'm too sure about that. So, being a week where the earnings season starts, with technology as the main earners at this point of time, here and there something is there. I don't have the list of the results day announcement, which you anyway find for the NSE site and all that. That you can search and find out what exactly and when exactly this thing is there. Now, couple of things. Thank you for all the YouTuber watchers who are opening account with us. And one thing is sure, it has to be in the delivery model and restrict that to delivery model. I do give deliveries at various points of time, but I am not too sure whether my people really tracks that or not. And that's a problem which we will face. That while I am saying in YouTube to buy something, you will find that something else has been bought. I am not responsible for that, let me be very clear about it. But at the same time, more or less, they also know which are the items I am generally buying. And in pharma, mid-cap, I'm a buyer in Marksons, I'm a buyer in Dishman, I'm a buyer in Jubilant Life Science, I'm a buyer in Granules, I'm a buyer in on the bigger one, I'm a buyer in this thing, Sun Pharma, on the lower side of the market. So these are general buyers. The timing is very important, and pharma should be the best hiding place at this point of time when you have uncertainties of the global markets and this and that. Pharma is better to hide around. Maybe you might not get great money, but then there are pockets of momentum which is going to be created, and that is the time you're going to get great money. There is some kind of a technical education course which is online, subscription oriented. Happily, I'm shooting for that at this point of time. You should go to a site called www.creditacademy.com. Credit starts with K and not C. They're doing some kind of a thing which is a package. I don't understand all that. I'm just shooting. I think it's a good learning experience for people who are at a great distance. It's in Bengali, so it should not be a problem. But then they told me they're subtitling in English also, so that should not be a problem. Anyway, that's a learning process. Whoever wants to learn technicals, the way I teach technicals, I'm trying to do that in a very easy style. It's like a storytelling on how to approach technicals and all that with various kinds of charts and graphs being put in there. So when will that get released? I don't know. It should take a bit of time. So let's look at some charts. I was talking about a couple of mid-cap pharma stocks. So let's look at the chart. Now this is a chart of Granules, and it has been a good up move after creating a long base somewhere here, about 100 rupees, and then it broke out and now what is happening is the RSI is not permitting the stock to go up further, so suggesting you need a bit of correction. I think correction up to here should be in order. Let's say 132. We are at 141. So about 132, this zone should be a good entry point. By the time the RSI would also get a bit of cool off. But suppose it does something like this, it starts trading above this zone, then maybe it will further move up, and I think closing above roughly 145 will suggest that it should go up. I don't like this steep movement. I don't like this steep movement, so it needs to correct a bit. I was talking about Dishman Pharma. Huge movements. One day, huge breakout. So obviously it needs to cool off a bit. Now if you look at the total full chart, there is a 337 has been the breakout point. There is a likely resistance of this earlier top of 373, which on Thursday last it managed nearly to that level, but then 373 happened to be the resistance now. But the way the chart has formed, I think there was a hurry over here, and so it consolidated and then fell off. So that hurry I see once again. So this time the consolidation should happen somewhere here, 310 to about 325. So this is the zone it might retrace. If it doesn't, then it gets registered at 373. But Nevertheless, not bad to buy. There are fundamental reasons why it should be on the buy board. So having said that, I suppose it could be a good mid-cap idea. It could be a good mid-cap idea, frankly speaking. And say Marksons. Kind of a double top formation. It's an inverse kind of a head and shoulder. This is more or less a breakout point that is about 95. Should it now start trading a bit higher? Let's say if it manage to close around this point, this is about 107, then maybe it will try to negotiate the earlier top of 112 to 114. It has momentum, volumes are there, so there could be continuation pattern. So good to buy on dips, Marks and Pharma, good to buy on dips, Marks and Pharma. So look at charts of this order and this kind of stories, because when the main market is wobbly and indecisive, I would say, and undecided at that point, this point of time. Why I tell you, let's look at Nifty. Let's look at Bank Nifty. It has more or less stayed 1, 2, 3, 4, 5 days of really. It's not be able to cross 400, 500 rupees. That's why I say go short with 550 stop. Now, the moving average is also flat, so thereby it doesn't give any indication as to a trading up at this point of time. So if you look at this resistance, and I'm too sure even after 50 basis rate cut with any euphorias, because the time lag between a rate cut and the actual things to happen on the ground takes quite a bit of time. So that's why there's no euphoria or there's no trigger as to why one should jump to buy the banks. But let's look similarly, while you're looking at this, you look at ES Bank. Very good move. Now trading within a range of 715 and about 743. So you can use the trading range in terms of going short on the higher side, buying on the lower side, going short on the higher side, buying on the lower side. So you can jolly well trade with ES Bank futures because nothing is going to happen in a hurry unless one day it breaks out. And I am wondering why it should break out. Results? I don't think so. Is the bank doing well? Yeah, reasonably well, surely enough, but if you look at this kind of a top, this is basically a multiple top of about 890. So 890 is trading at, let's say, 720. And that doesn't suggest that the market believes that the bank is doing very well. Now, that is not the situation with IndusInd Bank. IndusInd Bank on the other hand is near the high. So that's precisely why I said last week to short ES Bank. Now let's say look at week to week. Last week if I put a weekly chart, you went long on this thing and you gained about, let's say, 55 rupees, point to point. And in ES Bank, suppose you had gone short, you would have gone short on 720 and on the end of the week it's 731. So you would have lost about 10 bucks. So the net of hedge would have given you 45 bucks. So definitely ES Bank is an underperformer, whereas IndusInd Bank is an outperformer. Having said so, the role reversal is not likely to happen. That means IndusInd Bank becomes a underperformer and ES Bank becomes a performer. That role reversal is not going to happen. If you wish to know the internals about these two banks, I think as long as the currency volatility is there, IndusInd Bank is going to make more money in treasury operations than any other bank because they're very strong in treasury. That means currency oriented treasury. So that's why IndusInd Bank has this extra fundamental reason why it should be strong. Then let's say look at ICICI Bank. That combination also you can do. ICICI Bank. It's at about 168. Short ICICI Bank and go long on HDFC Bank. We just closed about 1074. If the bank tanks, ICICI Bank will tank more than HDFC Bank, so there will be always a spread difference. And I will try to encash on that. But then hedge can be done with some kind of a timing sense and all that. Like when you know the bank nifty is falling, do short the ICICI, but then don't go long on the HDFC Bank. So that time gap should be maintained. At the end of the closing of the day, you create the long position of the HDFC Bank and carry the short and the long simultaneously, and then start trading for the next day. So there are strategies of this kind of hedge with times, and exactly what is to be done the next day is a part of a trading program or a teaching program, which I am not doing it in YouTube. So while the bank is edgy and not giving the right signals, the overall market may actually dwindle and maybe within a range for the whole of the week, not giving really any kind of sign of that. Some pockets of buying here and there can always happen. Now, I think look at the metal stocks. There's still a short candidate, absolutely. Let's say look at JSW. From a low of 832, it has bounced back to 893 and now at 880. Question is, remain short by selling JSW. You might choose to keep a stop of 904 and then again short somewhere here at around 940.50 levels. And to hedge that, you can short by the way, Titan should be a short. Titan should be a short. It's about 315.16. Keep a 330 by closing at the stop and go short on Titan. I think what will happen, 330 is a good support and it's going to likely to break that support, 330. So right now it's 325, that's 5-6 rupees of short stop. I think the business vertical is in question of this Souro jewelries around the world. I find desperate ads being given by Anjali and other ones. Maybe you might say that that's before the puja and that's before the Diwali and all that. That's all bloody bullshit. Why? Because when you are desperate in giving one page of ad, there's something wrong with the business. Otherwise you wouldn't have been blowing money. Just putting ads will not make a lot of jewelry get purchased from Anjali and this or that. As it is the mindset of the Indians had to go to their Khandani jewelers and all that. I stay in places where Anjali has headquarters and I don't see any reason for any of us to go to Anjali. They will still go to those Nani Chand types or family jewelers. But nevertheless, the gold demand is less. I think it's a good shot. With that JSW steel you can go short in Tata Steel, as I say. One 12 times. You have to keep a provision of going short on higher levels also, but if you are selling here, the best course of action would be to keep a stop of 230 times. But I don't think the stop is required. You can short more when it goes to 230. But it's a hedge transaction between JSW, so wait for any kind of pullback. I believe the payroll data overnight, Friday night was bad, and I don't know what. So assuming that that is bad, then that's good. The interest rate is not going to be hiked anytime soon. So that's another interpretation the market may have. The US interest rate is not very high. So that can also create kind of a reverse logic. And if that reverse logic happens, then use it as a dead cat bounce, use it as a counter rally, and actually one should go short because these logics don't really work. It works for 1 day or 2 days, some gap up and all that. It doesn't really work. Also, together, if the market is in a state where the strategy should be use upsides to go short. It is not a market strategy where downsides are going to go long, but there are pockets of going long which exist in technology, which exists in pharma. So the timing is a matter of your own expertise. Now, having said so, I could give you some ideas about some mid caps. Hitachi Home and Appliance, which is closed at 1487, is a beautiful breakout. If it sustains 1439, then it can go up to 1550 Hitachi Home. And I've studied, I've given out in my newspaper on the first page that the structure of all the air conditioning manufacturing companies like IFB, Blue Star, Hitachi, and National Panasonic, all these companies, some white goods issue is coming up because of festive season. So there's a fundamental reckoning that these kind of swing trades can be, if it is successful, can be on a hold up to Deepavali. It can be hold. There could be a good swing out of that. You see, at the end of the day, indirect taxes are going up, so somewhere the manufacturing economy should be doing well. Not yet confirmed. One quarter does not really confirm economy or economic theories. They wait for time. But what happens when the market is not going to listen to good news? So all the good news, those euphoric 1 day or 2 day, are to be sold into. So I've given you the guidelines of Nifty, the Bank Nifty, a couple of mid-cap stocks, and just give some future ideas of trading in terms of going short in Titan, Tisco, JSW Steel, and pair trades continuation in IndusInd Bank and Yes Bank, and then now I added the HDFC Bank and ICICI Bank. The better hedge would be in terms of selling, let's say, X Bank by selling some PSU banks also. But PSU banks' fall has been so much that the momentum on the downward side I don't see great. So maybe it's not going to come of large use. SKS Micro is a stock which has to be watched. Either it breaks out or it stays here, either of the two. Breaks out happens only above a closing beyond, let's say, 430, 34. We are at 406, 400. Now current resistance will be 424. So if it goes up and can't move above 424, you can also go short. But something suggests me the same sense I have got in India Bulls Housing Finance, and which has moved up by 100 rupees from there. I think the same sense I'm getting in SKS Micro. So that has to be watched. I'm waiting for IDFC Bank to get listed, and I'll surely become a buyer in that. But then that should take some more time. So, but IDFC is a bad play. You don't go on long on IDFC. It's a bad play. It should be sold as many times it starts to go up, because the main IDFC business is something which I'm not really interested to look at and possess that kind of business in terms of holding in the stock. So IDFC Bank, once it gets listed, is a good idea. It's a good idea, absolutely. So some thoughts for the next week, some trading ideas for the next week. I think that should be enough, because this week really is a midweek review kind of stuff. What's happening, and if this is happening, then what is to be done? If that is happening, then what is to be done? So it really requires some kind of introspection during the week. Anyway, back to basics. Investment world is a enchanting world, and dips are good for investments in India. India is a great story. It's going to be further strong story in 2016. Some alert and some being prepared for this kind of a story is very much required. So while you are looking at the macro picture and all that, please try to understand that your basic job is an investor. As a trader, you can choose to do this, you can lose a bit of money, make a bit of money, but then your main job will be as an investor. We will continue doing this program every Sunday morning, and except maybe the Pujo types, Sunday morning, I think the puja starts, or I don't know whether it starts or not. Anyway, if it doesn't start by that particular Sunday, I'm definite that I'm going to do the program. And what is new? My classes are going on, so nothing new about that. Oh, I'm writing a new book, that is new. And I'm very excited with writing this book. I finished half of that. It's a concept of the complete understanding of investments and disinvestments, the complete, how to connect, including the basics. I found that a couple of books are there. If I do not tie the knots, then for a reader to assimilate and visualize the entire story of investment and disinvestment becomes a bit of a problem. He has to refer this, he has to refer that. Plus some ideas have changed over the time since I wrote the last book and things like that. So those ideas have now been factored in, and that write-up is being made. I'm too sure I'm going to get it released long before the Boimala. Should be. That's what I always say, and then I find that the printer is still not ready on the day of the Boimala with the books, and some 50 copies he lands up at the Mela. So at this time all that nonsense is not going to happen. Plus I'm going to rewrite the futures and options book. Totally revamp the entire thing. I'm naming it derivatives, but this is going to be a very, very fine-tuned write-up on futures and options. Unfortunately, everything in Bengali, and there's no scope of doing a subtitling in a book. But then, if someone volunteers to translate it in English, I will be ready to talk to him or her. Because the people who, there are Bengalis who don't read Bengali well, especially the absolutely young generation, like my son doesn't know how to read and write Bengali. Son name is Chatterjee, but then zero in that. So these people are to be also catered at some point of time, so I don't mind English version translated. But then my language style and translating that in English is a very difficult proposition. Anyway, these are things which are happening at this point of time. And new ideas. Yeah, I've discussed that in the last seminar, new ideas. They are doing well. And I now find PinCon advertisement coming up quite a bit in the dailies. Half-page ads and all that, soda waters and all that. But then it's a direct branding exercise. I think this puja will find a lot of PinCon around. I'm too sure about it. So the identification is right, Chiram River is the identification is right. Who performs when the connection happens, when do I enter, those are stories. Stories which are not really taking shape in Suzlon. So stories which are not really taking shape is, the infrastructure at the end of the day. So all taken together, let's wait for the next week and find out how things are done. Thank you.